Good morning, everyone. It is 9:30. Welcome back to CW Iowa Live. Lou and Jackie here, being joined by my credit guy. Or Jackie's credit guy. Everybody's credit guy. It is my credit guy. It is Sam Parker. He's here. And once again, talking about what he can do in case you're having a problem with your credit. And first of all, my credit guy, we need to find out, when do we come to you and say, hey, we need some help?
Yeah, well, we do free reviews for all of our clients. So I would say before you need me, come to me, meaning before you try to go get finance for a home, for a car, before you're stuck with a 24% interest rate on a credit card, it's a good time to check your credit out. I would always keep my eye on my credit. And, you know, anytime that there's anything that you're wondering about, you just give us a call and we'll give you some free advice. Or if you need our services, then, you know, we can come up with a game plan from there.
Now, last time you were on, you gave us some great tips, things that I had no idea about when it comes to my credit. And you're going to help us out with that again today by talking about co-signing.
Yeah. So co-signing is one of those things. And what a co-signer is when somebody goes to get a loan and maybe the bank says, hey, listen, we can't approve you, or we can approve you for a better rate if you had a co-signer. So somebody who makes more money maybe has better credit as well, right? And so
now, what would these loans be for? Is it typically a home, or is it school, or what is it for usually?
Where you see a lot of co-signing in its true form is going to be student loans, auto loans usually.
How about credit cards?
There's not so many. Usually, credit cards are going to be kind of on a individual basis, but you can do a co-signer for a credit card as well. It's just not quite as common. And so the pitfall of it is that people think that they're just helping a friend or a family member out. You know, you get the guy that, you know, whether it's your kid or a buddy that comes out of the woodwork that says, hey, would you help me out? And they go, you know what? Not a big deal. I'll put my name on there too. And what they don't understand is that when you co-sign, it's not that you're 50% liable for that debt. It's not that you're not liable for it. That's not the case at all. It's that you're 100% liable for that debt.
So a lot of times family members will pull the co-signer card out of their hat and present it to you in case you're in a little better shape than they are. And so your recommendation on co-signing?
My recommendation is to stay strong and say no.
What can happen? What's the downside of being a parent and saying, yeah, son, I'll help you out?
Yeah, well, and that's a little bit different in the situation of a parent. I know that you're going to help your kids out no matter what the credit guy says. So, but there's some ways to protect yourself. So first of all, what would happen? So if I go and I co-sign for my buddy's loan and he doesn't make a payment, I now have a late pay on my credit report, and it's not going anywhere.
And what, for people that understand it, because sometimes it's always, I forgot to make a payment. What does that do to your credit score?
What we usually see is a drop of anywhere from 40 to over 100 points. And
what?
For
one payment?
For one payment, yeah. And
really?
So those recent valid late pays hold a ton of weight. You know, especially if your credit is really good, then the system's messed up. If you make one mistake and you're at, you know, say over a 700 credit score, your scores are going to see those huge drops, the 70, 80, 90 point drop. Whereas if you're at a 620 and you add that same late pay, you might lose 20 points. So the higher you get, the more fragile
the bigger the penalty.
How does that work? Obviously, you've built good credit, so why are they chopping you down?
Yeah, I don't know.
I mean, we all make mistakes. We all like, oh, I forgot.
But this isn't even your mistake. This is somebody else's mistake.
Yeah, it was you
have to pay for.
It was your mistake to co-sign. That's what it was. And so here's my advice with co-signing. Don't be the second person on the note. Meaning that the notices of being late or past due are typically going to go to that first person, okay? And so when you're co-signing, you're equally liable anyway. It doesn't matter whether you're first or second on the note. Be first and make sure that you're the one getting those notifications, and then just have a side contract with your with the person you're co-signing for to make sure that you're not left, you know, holding the bag there on their debt. But be number one, and then that way, if that payment is a day or two late, they're contacting you. And then you can call the guy that you helped out or your kid and say, hey, listen, this payment's due. But at the end of the day, if they're late and they say, hey, I'm sorry, I can't make the payment, Sam, I'm going to go, well, this isn't ideal, but I'm going to make the payment today because I'm not going to have a late pay hit my credit report.
Right now, do you think that's the underlying thought of some of the people that have you co-sign to, in case I can't make a payment, maybe they can make a payment for me?
I don't think that's ever the intent, at least not with most people that I've run into. I really do think that it's that these folks think if I just could get this loan, then I'd be in better shape, right? And I think that what people need to do is stop putting the cart before the horse. You get your credit in order, and then you get finance for something. I understand that you want a car and that you think you need it right now. But, you know, you could probably pay cash for a $500 credit car. That's not going to be great, but it's going to get you to and from work for the next month or two until you get your credit fixed up. And then you go in and you get the 3 or the 5% interest rate instead of having to co-sign.
Yeah, smart advice. So, really quickly, just because this is boggling my mind out, how many points you can lose. How long does it take to build it back up?
Well, with a late pay will, the further that you get away from a late pay, the less it's going to hurt you. But at the 2-year mark, and a lot of people don't know this, it has no effect on your credit anymore.
But still, 2 years.
So 2 years later, it's eliminated.
Yeah, 2 years.
But that's a long time.
Yeah, even it'll stay on the credit report. You're still going to see that you maybe had a late pay more than 24 months, but you don't need to worry about it.
Okay, what if they do this? What if they miss a payment, and then the next payment comes around, and they miss that one too? Then what happens?
Can you drop a co-payment, or are you in to win it? Like, if you co-signed it,
you're in it until they refinance out of your name.
Yeah.
And that's why
I'm saying, the duration.
Yeah, that's why I'm saying don't co-sign unless you have to, unless it's something that you need as well, or if it's a kid that just they can't get it. But then, you know, the other thing that I would do, and this is kind of a separate tip, is that parents that really want to help their kids out, you could, you know, like let's say that comes, you know, they're 17 and they're going to get an auto loan, or you're going to buy them a car. Well, you finance that car, you put your kid on as a co-signer, and then you're building their credit. And then by the time they hit the real world, they have great credit. So there's ways to make the co-signer work for somebody, but I've seen it way too often that it can really hurt you, and then you're sitting there with no recourse because you're saying, I don't want to pay their debts off. My credit's ruined now. Sam, how can you help me? And I'm saying, I'm sorry, they're recent.
So if you're co-signing, you should be prepared to be able to pay the loan off.
If you are co-signing on a loan, you are taking out a loan.
Yeah.
You're taking risks.
You're not helping somebody. You are taking out a loan.
Okay. Good, important information. Now let's talk about another co-situation that doesn't go right, and we're talking divorce. How can that affect your credit?
Yeah, divorce, even breakups, same thing. So we have a lot of people that'll come to us and they'll say, hey, this was in a divorce and the judge said he has to pay for it or she has to pay for it. Well, I hate to be the bearer of bad news, but the mouthful that I give to them is a divorce decree does not supersede a pre-existing contract. Meaning, if my wife and I went into something together, we co-signed on something, the bank does not care if we're not getting along anymore. We signed our name on that line and said, I'll pay it and she'll pay it.
Right.
And
that's still legal.
Yes, absolutely. So the only way to get out of that, again, is to refinance out of that or to pay it off. And so I always suggest, even in the turmoil of a divorce, get your heads clear, and before everything starts to go crazy, make those preparations. Refinance, you know, if he's going to keep the house and she's going to keep the car, refinance the house into only his name, refinance the car into only her name, and then that way you have that true separation, because you never know what's going to happen if he's going to stop making payments, you know, something happens with a job, or I've seen it before where people are just vindictive, unfortunately, and they say, you know what, she still has the car, I'm not going to pay for this anymore, and then they don't make the payments, and now, you know, she's left with a repossession on her.
And you can't show up with legal documents, right, saying, well, he's supposed to be paying for it.
Very rarely. What you would have to do in that situation is go back to that divorce court and say, hey, listen, he's basically in contempt of court, rather than, but credit-wise, it is what it is. You signed a contract and you have to, you know.
Now, you mentioned a divorce. Obviously, there's legal documents with a divorce, but you also mentioned breakup, too. Now, explain what that part is.
So in that situation, we're going to kind of go back to what we talked about with the co-signers. And again, a creditor does not care what your relationship status is. All they know is that you signed on that document and they looked at your income and your credit along with this other person's income and their credit, and they said, combined, we will give you this loan at this rate on these with these terms. They didn't say just you. Or just him or just her. And so it's still a package deal. They still have you both on the hook, and they're going to keep you both on the hook, you know, and as would I, you know, if somebody comes to me and says, hey, Sam, you know, can I borrow some money? I might say, well, if both you and you promise to pay me back, and one way or the other I'm getting my money back, then cool, but not just you. I don't, you know,
and that's what they're looking for.
Exactly, exactly.
They're looking for their guarantee, getting their money back.
Yes, absolutely.
Or a better guarantee of getting their money back.
All right, some great advice this morning. If people want more advice or they want to get in contact with you because they're wanting to make their credit better than what it is right now, how can they do that?
Yeah, they can go to our website, which is just www.mycreditguy.com, and there's a link right there for a free consultation. They can also give give us a shout at 866-726-7339.
And again, if you are in the market for purchasing something and you think credit might be an issue, it's better to come to you, visit with you first, try to get your credit built back up, and then go try to achieve the loan that you want to get.
Yeah, absolutely, because the way it's going to work is that they're going to get referred to us anyway, so they might as well start first with us and then go from there, and then not have to go through that that process that can be frustrating of being told no.
How long of a process is it to kind of boost your credit rating up?
Yeah, it could be that I give you some advice and that you go and have your credit pulled in a week and everything's good to go, or our average client is with us for about 3 months. So it really just depends on what the situation is. But we start with a free review and a free game planning session, and if that all sounds good to our client, then we go ahead and we get started.
All right, there you go. Some advice from My Credit Guy. Yeah, you're welcome. All right, thanks, My Credit Guy.
No problem. Thank you very much.
Thank you very much.
We'll be right